Day the 10th, this week, the 10th through the 14th, and we have two major news events that we're going to talk about here in just a minute. Before we get into the charts, let's take a look at the risk disclaimer. We understand as risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptos. You know the deal. If you're following them out there on social media, make sure you're following the real me. Mondays and Fridays for the live sessions for the Pulver Report, youtube.com/Chris Pulver. Facebook, Real Chris Pulver. Instagram, Twitter, TikTok, Real Chris Pulver. Anybody that sees messages coming from me that's soliciting and junk like that, please mark them as scammers, spammers, mama jammers. Get them kicked off, right? Okay, let's get into the charts. First, let's actually go to the news because this is what I want to talk about. Excuse me. First things first. For the week, start things off. CAD US. This is today. What bank holiday is it? Happy Columbus Day. Banks are closed. So we might start off a little slow. We have IMF meetings going on all day as well. We have lots of Fed speak. So Brainerd speaking this week. Average earnings index claim account. That's from the UK. The big ones I want to point out. We have GDP coming out of the UK. We have PPI coming out of the US on Wednesday, 8:30. We also have FOMC. This typically would be your FOMC meeting where they'd have a rate decision. They don't have a rate decision this month. The rate decision has been pushed to November 2nd. After the non-farm numbers last week, the probabilities have increased that the market's expecting a 75 basis points hike from the Fed. Has it been priced in? Possibly. I mean, we did tap the lows from June in the stock market. We revisited lows in the Dow, revisited lows in the Qs, revisited lows in the S&P 500. So I really think this week is going to hover around those lows. Our 2-day rally that kicked off Q4 last week was pulled right back to the starting point. And with PPI and the next day, Wednesday, Thursday, so 8:30 news on Wednesday, 8:30 news on Thursday, this is going to be a big one. All right, so the year over year is expected to print at 8.1. That's another 0.2% better. If the month over month prints better than expected, we'll see what that looks like. You can see here that there is a previous at 0.1. If it prints at 0.2, we need to see month over month negative, right? I mean, I think the statistics right now are you could print 0 CPI and we'd still be hovering around like 5% year over year. So there's still a lot of work cut out for the Fed to see CPI numbers get down to their target levels. They've done a good job smashing sentiment, real estate, tech is contracting like crazy, jobs are being cut left and right. But maybe there's more. After non-farm last week, maybe there's more. They're trying to suppress wages. They're trying to suppress job growth like 100%. But I'll say this. I'm interested this week in getting positioned for maybe a stab at a rally. If we do see an improvement to the print or maybe the market likes what it sees as far as the movement. So if I go to year-over-year inflation, there's a ticker here on the charts. So we're sitting at 8.3. If the next one comes in as expected at 8.1, that is the argument that inflation has peaked. Now, are we a long ways away from 2%? Yes, a long ways away. But over the next 12 months, if the market is a discounting mechanism, at one point is the market going to be able to say, hey, look, we're heading down to levels that are, going to get priced in or have been priced in. What would be terrible would be if we print, as high or higher, expect the market to find some fresh lows. So I was doing some reading this weekend, levels that we want to keep an eye on. If you go back to the SPY, got a bunch of crap on my chart, so I'll clean that up a little bit on the daily. Technically we're looking at this 340 level. If there's more violence to the downside, that 340 level could easily become 315 or 320. And then from there, depending on how aggressive that move was, I mean, we've had like right here, a little rally to the upside, violent move, violent move, violent move. This was 3 major catalysts. We talked about this. End of August was Jackson Hole. Then we had CPI. Then we had the Fed. Those 3 pretty much in unison. It's all kind of Fed dominated, CPI, inflation, all that sticky stuff that everyone hates right now. But that was enough to drive the markets back to lows. If we see another inflation print this week and it's bad, it's probably an easy move to the downside. So, stocks and options traders with me in the Equities on Demand trading room, we are positioned for that. We've also have some protection in things like the VIXM, the SPY, Apple, some bear call spreads, and at the same time, I also think it's wise this week that if we looked at some positive movement, I think this week it's not just it's going to be negative. I mean, it seems like the path of least resistance could be negative, right? But a surprise to the upside, we could see a pretty violent snap right back here to 390. So I may look at a couple of long calls this week on the SPY. Again, it depends on price. I don't want to pay an arm and a leg for them, but maybe if I went out 20 to 30 days, we'll just see how much that debit costs. Or we could also look at a potential straddle where we have long call, long put, sell a call, sell a put. Reduce the size of those debits and see what our net profit could be. So we'll take a look at a couple things this week in Equities on Demand. We got a whole list to go through from A to Z. And currency-wise, all eyes on the dollar. DXY. I got to type it in first. There we go. 113.01. Again, equities and dollar, negative correlation. So if you see stronger equities, you'll see a weaker dollar. You see weaker equities, you'll see a stronger dollar. Do not ignore this path of least resistance on the dollar. Don't ignore a number like 120. If we're going to put a technical high in, we put a short-term top in here back in late September, but that didn't force a bottom in the equities market. We had a short-term bottom, but we're right back to the lows again. So we're going to see what this week gives us. Data-wise, are we driving the dollar higher once again? Or are we going to get some risk appetite? Risk appetite, weaker dollar, stronger equities, probably rally on Bitcoin, all that good stuff. So we'll have to keep our eyes on things. Let me jump into the channel, say hi to everybody. Yep, we're live. There we go. All right. And we'll kick off some currency strength. We'll get into some setups for the week. And Brad, Thanksgiving in Canada. Happy Thanksgiving. Sterling, good morning. Rathan, good morning. Jason, what's happening? David, good morning. Donna, good morning. Joseph here. Moshe is here. Chris is here. Everett's here. Good morning. Morning, everybody. Okie dokie. Let's take a look at the currency strength chart. So some volatility to the downside. The Aussie stretched right around that late Asia session, early active session. Aussie's getting beat up pretty badly. That's fine. We're going to take a look at Aussie Dollar. I'm curious at those pre-COVID, or not pre-COVID, I've been saying pre-COVID so much because of that pre-COVID high at 340 on the SPY and 240 on the Qs. The COVID crash lows in Forex back in March 2020. So looking at levels like that to scoop up some Aussie Dollar. We have the CAD on top with energy prices. Oil made a big rip last week. So if I can type it in correctly. U.S. oil and UK oil. We're sitting at 91, basically right at 92 bucks. But we had 1, 2, 3, 4, 5 bullish days last week. What I was looking at on oil, we talked about this in Flex. We talked about this in Equities on Demand. Is it just as simple as a trend line break that found some lows? And we're going to see this stay bullish. I'll just look for this. If we see a buy on dip or we see a new high, I think oil is going to continue to make a run. It's hard not to. I mean, if there's any demand for it, you have an active OPEC plus, members are intentionally cutting to keep oil prices high. That's where their money is. That's where their profits are. So why wouldn't you do that? It's the last thing the U.S. wants. The reality is, the Fed alone can't curb energy prices. I mean, raising rates is just going to bring a global recession versus just a slowdown in the U.S. So maybe that's their plan. I think that's a pretty horrible plan. But you know what? I guess if we can't enjoy it, nobody else should either. That's how the U.S. plays on the playground. But big bullish move on oil last week. If we see, like I said, buying the dip, I'm looking at support as early as 90 bucks. We bump off of 90 and we jump back and close at fresh highs, 93, 94 and beyond. I think we're going to see triple figure oil here this week. So again, getting positioned for that for certain stocks and options. I'm long energy. It's been the one highlight sector this year, and perhaps that's the only highlight. I mean, if you look at sector tracker year to date, it's nearly up 50%. This was at one point up like 60 to 65%. It pulled all the way back to 30%. We've had every other sector underperforming, right? Utilities is okay, but that's very protective and super low volatility. Consumer defensives and staples, I've positioned for that quite a bit. Overall, the sector is down. Stocks are down, but I think they're also at pretty good prices with dividends, and so some of that kind of offsets. But energy is volatile and remains pretty darn strong. So energy is the play right now, and it has been really all year. If you had the courage to, buy some of those big collapses back in June, energy still is paying out pretty nicely. So we've seen some nice turnarounds. We have a lot of credit spreads running equities on demand that are getting into positive territory once again, which is great. And we're going to see if energy and oil continues to kick to the upside. Let's go gold and silver. Watching the correlation, of course, with gold and the dollar. Gold had a nice little run. We got back above 1676, which was my bullish line in the sand. So they did get above it, but we're right back to it. So again, news this week. What are we doing on gold? Depends on what we do on the dollar. Are we going to bounce and hold? Are we going to give it all back? If we give back gold and we take out lows, expect the dollar to make a new high. That DXY would probably break the 113 level. So gold and silver will continue to be correlated with the dollar. Silver, same thing. Silver did take out this recent high. It was up at 21. Now we're at 1976. Looking to see if we can hold a bounce this week. Do we bounce on silver? Do we give it all back? There's still corrective potential to the downside, but longer term, I'm still bullish on silver. We just need to break. This needs to break. I mean, we have a bit of a false breakout here. Just following some really easy trend lines. Once we get some price clearing this 200 EMA, looking for some open space and some bullish follow through. By that point, we'd have to see a weaker dollar starting to get into a sell zone. Okay. Morning, Russ. Morning, Andrew. Charles, good morning. Nice to see you. All right, and then let's take a look at Bitcoin. Bitcoin trading at 19,416. Still watching 18. Big numbers. That I'm going to go down to 15. Just set a chart alarm here. $15,000 and 12,500 and 10,000. I'll just set all those kind of key numbers for me. Okay, so give me a second here. Benji wants to come up and say hello to everybody. Make sure we're here. Hang on a sec. Audio is still all right. Good. Just make sure I didn't lose the microphone. All right, bro. You're good. Oi, oi. There it is. Okay, 12,500, and then one more alert on just over the 10 mark. All right, we'll go 10. I'll go 10,100. There. All right, so a couple of crypto levels there. Still strong support at 18K on Bitcoin and Ethereum. Still strong support at 1,000, trading at 1317. Pretty quiet the last few weeks. After that proof of stake went into effect, things have quieted down on Ethereum. We still have major support here. I like this level to hold and look to see if we can bounce, maybe head back up. I mean, that's not a bad move, right? I mean, that's a 2x upside right there. So worth considering if tracking, if paying attention. Other currencies, let's just have a run through everything. So dollar, we know, go to the DXY. This week, are we going to break the highs or break the lows? I'm going to set a chart alarm at this low, 109.98. Breaking lows. And we still have some pivots aligned. We have some structure here. If we break below the 50 EMA, we have a really high bar count. It's like I think it's 280 plus now. So this goes back to September of last year. So we're a year away removed, and this is now 285. So it's a pretty high bar count in the daily time frame. I just, again, I'm actively looking for price action tops. I'm not saying we're getting it right now, but it does seem to be this high, this low. If the dollar ends up breaking some lows this week, we're likely gunning for that 200 EMA, which is a correction that's been, I've been waiting for at least 20, 30 trading days once we started stretching those high twos. So also, I mean, we could stretch higher. That's why I have all these chart alarms set in here. It breaks the technicals in a way, getting up to 120 because we'd have this massive capitulation. But from there, look for a top and then a high volatility correction back to this 200 EMA. So even if we get into these highs, I will absorb that and I will probably fade that in my currency trading. Let's go through pairs here. So Aussie CAD, Aussie's getting hit pretty hard, which is really interesting. So mainly the play here is stronger dollar, weaker China. And even though we're seeing pickups in oil, we're going to look to see, do we have any pickups in commodities? If we have pickup in commodities, the Aussie will maintain some resiliency. I think that the Aussie CAD, especially with commodity versus commodity, I'm just looking to, I'm holding a long position. I looked at this as a correction, high to low, lower high to lower low. So I'm starting to get positioned long on the Aussie CAD. And I'm essentially building in this green box you see on the screen and down at the COVID crash lows. So this is position 1, position 2. I'm just going to hold tight on the Aussie CAD for right now. Okay, down the list, Aussie Swiss, we're at 63. Next level I'm watching, there's a pocket at 6,000, and there is a COVID crash low around 5,400. Aussie yen, we're barely breaking lows. Traders should be protecting profits in that level. We were short above these highs around 97.50. Started to break the trend line. This is a bit of a rising wedge, which means there's room to come back to where this thing started, right? There's room to come back down, which we're close to it. We're close to this level. We're close to this level. And the way it's been moving and stalling, it hasn't really been the fast, rising wedge we're used to seeing when everything falls really quickly. So that being said, if you are short, have no risk on the trade. Eliminate the risk if you were up high enough. Go to a shorter time frame, try to eliminate risk quickly. But if we get back down to, let's say, 88 or previous resistance here around 86, those would be my profit levels, expecting a bounce to come sooner than later on that. Aussie New Zealand, I'm still holding short at 12.75. That's my break even. So far, this is looking better. RBNZ did raise rates to 3.5%. The RBA, which is the Reserve Bank of Australia, held off. They kind of under-delivered. I think they raised rates up to 2.65 as opposed to 2.85. So there is a bit of a discrepancy between the official cash rates of those two countries. So I'm looking at Aussie New Zealand to the downside. Hopefully we see this one just roll over, start to break the trend line, work its way back down to 111 or 110.50. And that'll be a nice little profit for flex traders. Aussie dollar, we're at 63.14. I'm waiting for a trend line break. And like I said, I'm just waiting for a potential COVID crash around 55, 55.50, and I'll start to buy. So I'm just going to wait. We get a chance to maybe dabble here like 50, I'd say like 56, cut it in half to 53, go to 5,000, trade 1, trade 2, trade 3, look for a trend line break. That's a pretty easy way to get positioned on Aussie dollar. So those extremes may not line up, but I hope they do. I think that's a really good buying opportunity. CAD Swiss, looking for a reload at 71.25. I did take some profit. I didn't get the chance to get refilled. I'm still holding some long positions from back in here. So I still have some long positions. If we come back up to this green box or pocket, I will probably end up taking some profit there. If we just range, which that wouldn't surprise me, I'm just going to buy some more down here around 7,100. But I'm still long overall with some positive rollover on the CAD Swiss. CAD Yen hasn't broken. We have tested this now for 3 weeks. We haven't broken the lows at 104.50. The Bank of Japan intervention lows that we had from a few weeks ago. We haven't broken that low yet. So one thing to look for, and we put this in the flex room, we have a sell stop at 104.30, I think, 104.30. And that's just to see if price breaks below this level. It breaks and drops quickly, finds some support in here, finds our exponential moving averages. We might be able to grab a couple hundred pips. If we eliminate the risk and let it run with a trailing stop loss, we may get lucky enough to hit this 100 level. So we get a sell trade around 104.30. Hopefully we can get some trailing stops in and get down to 100 and go after a few hundred pips there. That'd be CAD Yen. Swiss Yen holding at 105, or I'm sorry, 145.66. this massive BOJ candle, and I'd like to see this one break the downside at 144. Measured moves around 700 pips. I'm looking for another move to the downside to match that. So if we break at 144, take another 700 pips off, that puts us around 136 or 137. So hopefully we see that break to the downside. Euro Aussie. Choppy. I'm no longer in this trade. Traders, we were long here around 4,400 and just following some trend systems up to the upside, but we've protected profit. Cautious on this one. I don't have a trade running. Euro CAD. I don't have a trade running here either. We might consider getting back in around 3,000, but I'm trying to buy this one lower, around 2,500. Euro Swiss trading at 97. If we break these highs this week, that'd be a good sign. We might have a bottoming formation that's getting started. So this could be a head and shoulders that's getting angled here. We start to break the neckline. We get another pullback and it runs up here. Looking for a nice little pocket fill around 102.50 to 103.50. This could also head up into this high. This becomes the head and shoulders pattern. And then we look for a pullback here for right shoulder and then project the move up. We're still getting to the same profit level around 102.50, 103.50. I would like to see some type of move up here towards 105. If there's a way I can hold on to my long positions towards 105, I'll be a very happy trader. Euro pound, anything here? No. We're still in a slight long position, which I don't think that got stopped out last week. Let me check the trend line that we set. Still in. Yeah, 86.50 is my stop loss, so still in the trade, still long. We still have some pivots to the upside. Hopefully we get there. Euro yen, anything here? I would stay out of euro yen for right now, unless you're looking to sell it high. If you sold it high around 144, that's looking pretty solid. I'd eliminate risk quickly if that was the case. Euro New Zealand, Euro Aussie, very similar. Leave them alone for right now. Euro dollar, pretty much the inverse of the dollar index. Dollar index makes a new high. Euro dollar is probably making a new low. I'm prepared and I'm in this position long. I've scaled out of some euro dollar long trades and taken some small losses. I'm prepared to take the euro dollar down to 90 and down to 85. If those levels get activated, I will buy into those levels and I will fade that dollar and I will look at euro dollar long. Now, where does that go from there? Well, if we come down to 95 or 9,000 or 85, I will take it back to 105. You know, parity is a nice mark at 100, 1.00. But we take it back to 105, that's multi-year support and resistance. So again, DXY will be really the driver here. I mean, 50+% of the DXY is euro. So if the euro dollar is going to go lower, look at the DXY, you'll see it going higher. Okay, pound crosses after the big flash crash move. I'm curious if the pound has put in some seasonal lows. You know, we are getting some pullbacks on pound CAD. This will be interesting to see if we have a higher low to higher high coming or a higher low to maybe equal high. Maybe some range trading here on the pound CAD with some high volatility. So I'm looking for some bounces right there. Pound Swiss holding pretty steady, maybe a pullback towards this halfway point. So we have our low, so we have our flash crash low. We have our high. We pull back to say a 382 or so, go up to a 127, find some structure in here. Or maybe we pull back halfway, find these pivots, head back up to the same highs, and look for some volatility and some range trading. Okay, pound yen. Pound yen, sell it high at 168, buy it low at 150. I'm staying out of it because it's super high volatility and pretty messy. Pound New Zealand, I'm done out of this one. We had it marked on our charts, 83.55 pending buy. It was a trade that was in my broker platform. It was canceled over months of not getting filled, and that was very disappointing because that would have been a great trade to go up 1,000+ pips. Just trading structure, just trading major support, which we had around 8,300. So, you can see the lines I have in the charts. It was already marked. We had a pending buy-in. I know some traders in the trading room got it, which is awesome. They were celebrating a huge win over the last couple weeks, and we did fine. I mean, between a couple of robots and some manual trading the last couple weeks, I cleared like 2,600 pips. So we're doing just fine. All right, pound dollar 1.1051. So same thing here. I mean, are we putting in a low even with the numbers this week with PPI and CPI and the dollar index? Does the pound dollar put in a higher low? If it does, do we head back up to this level? That was around 114, or do we come all the way back down to the lows, look to retest that flash crash bottom? I wouldn't mind looking for a chance to trade that though. Look for some support, trade it back to resistance, and maybe we have a larger bottom getting put in. But what's pretty amazing about this area is now we have 1,000 plus pip movement, right? I mean, from 104 to 114, that's 1,000 pips. If in a way, if we also came back into the lows and broke the lows and hit parity, and then from parity we come all the way back up here swinging at 114, there's still some pretty good opportunities in the medium term to buy some crazy extreme lows at 30 plus year lows. Okay. I just got a chart alarm there on TAL. Let me see where that one closed last week. Please tell me it closed above $5, because if it did, so that low and that close right at, oof, I hope I got it called away. If not, I'm going to get it covered this morning. But I had a covered call at $5. Hopefully they called it away. If they didn't, I'll just cover it again. All right. Sorry, that was a distraction. Pound US dollar, New Zealand CAD. CAD is outpacing the Asia currencies. So New Zealand and Aussie are underperforming against the CAD. I'm still long in this one. Where would I go back to? I just look at the weekly chart and the monthly chart, and I'm just waiting for a trend line to break. This is a slow volatility pair. Would I take it down to 7,000? Yep. Would I take it down to 63? Yep. I'm just waiting for a trend line to break. We get a trend line break, we probably head back up into some type of channel behavior, something like this. So we form a low, we'll likely head back up and find some structure. I'm still holding some long positions, trying to get back to 83, 8,400. That does look like it makes sense. If it falls with a big move to the downside, I'm going to start lining up more aggressive entries and try to trade some near-term pivots and pockets. That is New Zealand CAD. New Zealand Swiss, pre-COVID, or see, I did it again. COVID crash lows, 53.50. Look for a pending buy. That's what I'm doing there. New Zealand yen, if you sold it at 60, or it was 86.50 to 8,700. That worked out really nicely, and you'd be protecting profits the last couple of weeks. New Zealand dollar, potentially the COVID crash lows around 5,400, 5,450. Watching that level for potential buy. Dollar CAD, oil's up, so is the dollar. This one's kind of pausing after a big break to the upside. If we have another poke at, let's say, 140, looking to sell it, we go all the way up to 146, absolutely looking to sell it. So I'm looking for a short-term top here on the dollar CAD to grab some resistance trades, sell it nice and high, but prepared to take this up to a potential pattern trade, major resistance trade around 45 or 4,600. Dollar Swiss, we're trading right back up towards parity. 1.00. Now I'm looking for this to potentially fade this week. 1.00, nice resistance. See if this ends up coming back down. I told traders this. I did have pending orders, but I've canceled them. Reason why is we have major resistance up here around 102 to 103. And so if this breaks to the upside and hits this channel top again, maybe this is the fifth wave. Wave 1, wave 2, wave 3, wave 4. We might be in for a fifth wave. So I don't want to fight and fade this move at the highs if it's going to go up another 200 to 300 pips. But if we go to 102 or 103, I'm looking for that to be a pretty good break to the downside. So I'm looking to sell it higher. We might see it this week where there's resistance at parity and it drops. And maybe I missed that trade, but we see a bounce in the euro dollar and we see a play against the dollar in general, right? So we'll watch. Dollar yen 145. We are retesting those Bank of Japan intervention candle highs. So I have some chart alarms set. It's going to be interesting to see this week. Are we above 145 or below 145? Does a BOJ step in and do any type of intervention? Maybe. Do we have something like this structurally where we tap these highs and then start heading back down to the BOJ candle low? That's around 140. So that'll be the price action I watch this week on the dollar yen. Some of the exotic pairs, the dollar is lining up for a really nice correction across the board. Dollar, South African rand, Norwegian krone, Turkish lira, Singapore dollar, dollar Chinese yuan, Hong Kong dollar. I mean, there's a lot of other exotics you could look at, and it looks like the dollar is due for a correction. But path of least resistance right now is the DXY, and it's bullish. If you're looking at a two-year yield, let me see if I can find that here. So the USO2Y, if we're not putting in a top on the 2-year, we're not going to put in a bottom in equities. Not yet. All right. So there's a couple of interesting correlations going on. The 2-year, the 10-year, we're in this crazy inverted yield curve. The 5-year, the 10-year, the market's ability to price in the Fed funds rate, inflation numbers. I mean, all these things are just driving the big driving forces behind dollar strength, safe haven flows. Bond prices have been crashing, yields have been rallying. Look at the 2-year, it's up to highs. Look at the 10-year, look at the 5-year, look at the 3-month, look at all of them. Bond prices or the yields have been going through the roof. Prices have been collapsing. I mean, we looked at TLT. We're at some fresh lows. We're going to see if we get filled on some credit spreads this week. The IEF, that's your 7 to 10. We're back to lows. And then the SHY, that's your 1 to 3 year at some lows. So bond prices are imploding. I'm looking to trade it over the next couple of months. So I have some credit spreads running in equities on demand. Okay, so any questions? There's a lot to digest, but I mean, we've talked the same stuff and directions and catalysts through the trading rooms. If anybody's out there watching for the first time, do me a favor really quickly. Will you hit that thumbs up button for me? If you're coming in live, checking out, watching the recordings, hit the thumbs up button. I appreciate that. It helps the channel a lot. And if you want to trade with me live, a couple things you can do. Free newsletter. Come to the website, pulverreport.com. Join the newsletter. I send out a top weekly pick in stocks, options, Forex every single week. And then I have some automation systems for Forex. I also have trading room opportunities. You want to trade with me for a full month? I do trials for 27 bucks. So you can take a test run, try before you buy type thing. Trade Forex with me, trade stocks and options. I highly recommend both, not just one. It's nice to have that diversification. I've this year has felt like I've essentially been hedged the entire year. So I've been long the dollar and short the dollar at the same time. I've been long euro dollar and long dollar Swiss almost the entire year. I've hedged on JPY pairs. I was long on Aussie yen and euro yen while being short dollar yen and Swiss yen. Again, point is, we can trade a lot of that stuff where it's a bull market, bear market, and currencies, or the stock market. It correlates in currencies. We can trade that. There's way less to look at, but currencies can also be a little nuts. And this year they've been crazy. Volatility is up. Irrationality is high. It's been a trend trader's paradise in currencies this year, which is not usually the theme, but it is what it is. It's a good way to trade. And then stocks and options. We're back to lows on ARC. I just had a chart on there. Stocks and options. Great trading room Monday through Friday. We are well positioned for whatever the market wants to do. Market wants to go up, great. Wants to go down, wants to drop to recession levels, and everyone's burying their head in the sand and running. Doesn't matter. We're going to be fine. Market goes sideways. We're going to be really fine. So we are actively positioned for everything needed to be successful. Okay. All right. But yeah, you can join the newsletter for free. Trading rooms, trial for 27 bucks. Trade with me live for the entire month, or just come back and freeload on the Mondays and Fridays YouTube channel. That's fine too. But if you want some trading stuff and some lessons and some trade calls, then come to the trading rooms. Cool beans. All right, buddy. I'll see you back here on Friday at 9 a.m. Let's see what happens with the news this week. Again, Wednesday and Thursday. Happy Columbus Day. Banks are closed today. Which are they? I feel like, Forex is moving. I've got chart alarms going off, so stuff's still going on. But it is a U.S. holiday. I don't know if it's bank holiday or just a U.S. holiday. It says bank holiday. So maybe it's just quiet on Wall Street. But anyway, PPI numbers coming out Wednesday at 8:30 and CPI on Thursday. The last 2 months that we've traded around CPI, we've been in the flex room. That's when the data comes out at 8:30. We're in the flex room from 8 o'clock onwards, and it has been super volatile. And so there will be a big move in currencies that day. There will be a big move in the equities market that day. We're just going to figure out what direction. And I'm curious if the market, it's not the Fed pivot, but it's the Fed pause. Is the market going to say that, hey, you know what? Inflation is coming down. The data is improving. They start to price in these rate hikes, which they've already been doing, but looks like, by 75 basis points November, 50 basis points December, 25 more basis points, maybe February, March of next year, and then the pause is in effect. So the Fed has been playing a game of chicken with everything. Now they're playing a game of chicken with energy, and I think they're going to lose. I think energy will kind of smoke out the fact that the Fed will not raise rates to 5.5%, 6%. I don't think they will. I don't think they, if they do, it's a short-term solution. I don't think the Fed wants to do anything past like 6 to 12 months at those type of levels. But that's for us to figure out. Okay, Ruth Ann, no problem. I'll do it for you right there. Ear scratch for Benji. All right, bank earnings this week and Apple. Okay, big earnings week then. That's good. So we'll kick it off, see how things fare, especially when it comes to bank earnings and large cap tech. Always a big way to kick off Q4. So okay, interesting week ahead for sure. PPI and CPI we'll be watching. Trading the trading rooms. Interested, you can join me, pulverreport.com. Get into the systems tab and the trading rooms tab if you want to join me. Traders this week, see you in the usual rooms, and see you back here on the YouTube channel on Friday at 9 a.m. Okay, thanks. See ya.